Allow me to show you something.
Hello everybody and welcome to day 7, the final day of Southeast Asia DeFi week. Really excited, to bring you guys the final day of content. Right now it's 4 p.m. We're broadcasting live from Asia Blockchain Center in the skirts, of Kuala Lumpur City in Malaysia. Southeast Asia DeFi week is made possible thanks to the many media partners that we have supported us across Southeast Asia, our friends from the Philippines, our friends from Indonesia, Thailand, Vietnam, Singapore, and in Malaysia. So we have covered so much over the last 7 days. It's incredible. But if you are just listening in for the first time, today, what is DeFi? DeFi is short for Decentralized Finance. The simplest way that I can give a definition it's basically financial products that you can use today without needing intermediaries. And over the last 7 days, if you have not been following, we highly encourage you to rewatch the last 6 days of coverage, because we covered so many things. We covered Compound, Aave, Instadap, Uniswap, 1inch, Loopring, Keep, Synthetics, Curve, Balancer, Mu0. We covered lending protocols. We covered liquidity pools, decentralized exchanges. Now, if this is all very new to you and it's it can be quite a lot. One of the things, that to simplify things is to look at it as what DeFi as the building, of the emergence of what we call money Legos. Because all these individual projects are building something that is useful, that that allows you to do even more, with your cryptocurrencies. It is kind of like an extension of what the superpowers of what cryptocurrencies can do. Cryptocurrencies allow us to receive and spend in 5 different ways. Number 1, globally, openly, borderlessly, without censorship and without permission. But this time, with these emerging protocols, like they allow us to borrow, allow us to lend, allow us to save, allow us to trade. And you got to learn, okay, what are the different money Legos that exist currently in the DeFi space. Another thing, okay, because of what we are seeing right now in the space, this is the reason, okay, why, and one of the reasons why this space is receiving a lot of attention is because it's something that we've never seen before, which is the fact that it is very, it allows for a lot of composability. What that means basically is that traditionally in the financial space, if you want to innovate, you couldn't really do that because there are so many legal compliance issues, licensing requirements, etc., etc. Whereas right now what we're seeing is that when one group of people, okay, creating something really useful like interest rate markets, okay, that's one money Lego, and or flash loans, okay, that's another money Lego. What happens then is that people are able to say that, oh, okay, I'm going to take that and I'm going to take this and create, okay, their new innovation, and that is probably one of the reasons why things are moving at an accelerated pace. And we are seeing currently DeFi getting extreme amount of attention, parabolic growth, hit-turning, mind-blowing product market fit and traction. However, at the same time, it is very important, okay, for you to know that this is still a space with a lot of high risks and high uncertainty, okay, as can be seen from some incidents that happened last week, okay, which I am very excited to find out the thoughts, okay, of our panel today as well. So a quick disclaimer, all right, that everything that is shared, okay, everything is shared throughout Southeast Asia DeFi Week is not financial or investment advice. The reason why we conducted, okay, this is because we want to help bring education, okay, of DeFi, help people to understand and learn DeFi. There's really a lot of risks involved. Now, we've covered 7 days of content. We didn't touch on this, okay. I thought that it's important to bring it up. What are the kind of risks, okay, that can happen? Number one, smart contract risks. This, even Vitalik Buterin himself, the co-founder of Ethereum, emphasized that a lot of people are underestimating this. There can be bugs in the contract. There could be backdoors, okay, where people can siphon the money. This is an uncertainty, okay, when you're dealing with these new protocols. A second, okay, risk, which is very common, okay, is I do not know what to press risk, or I do not know what I'm doing risk, okay. This is probably the number one reason why a lot of people lose money. Is the number one reason why, okay, like for example, paying transaction fees, okay, as excessive transaction fees, sending 2 requests at a single time, you do not know why the transaction fails. These are all costs, okay, that can eat into, that can make you lose money really fast. So you just need to know that there are a lot of risks. There are a lot of financial risks, okay. What you put in may not, okay, may not make you money, okay. In fact, you just need to go in, okay, with the mindset, okay, that you might lose everything, okay, because there's just so many uncertainties in this space. There could be governance risks, okay. When a protocol is working in a certain way today, does not necessarily mean that the rules, okay, would forever be the same tomorrow. And last but not least, okay, fraud risks, okay, especially when a space attracts so much money, okay. There is a lot of incentive for bad actors to basically mushroom and try to defraud people of their hard-earned savings, all right? So why do we create, okay, this entire 7 days is to help more people to learn about DeFi by providing a safe, neutral, and easy environment, okay? Help people to differentiate what is real, what is fake, what is legit, what is full of not legit, okay? And help people to find remote work and generate an alternative income in this industry. Because if there's one industry, despite all the chaos that's happening in the world right now, one industry that is booming and it's hungry for talented contributors, okay, good actors, is the crypto slash blockchain slash DeFi industry. And if you're able to educate yourself and be informed and get the right kind of information and be a contributor in the space, then you're going to become a very attractive person that people will want to work with you. There are a lot of exciting, meaningful, reputable, well-funded blockchain projects out there, okay, looking for you, okay, to become either their user, their fan, their champion, their early adopter. So we've covered 7 days of content. We are finally here on the 7th day. We apologize, okay, that Dia couldn't make it an hour ago. They had a technical issue that required the entire team, okay, to be all hands on deck. So they sincerely apologize, okay, for being out. But, okay, do stay till the end. Okay, we still have this panel and we have Maker, okay, tonight. Do give in, okay, your be active, okay, and ask your questions. Take the opportunity to ask as many questions. The top 10 best questions today will win really, really cool prizes, okay, from Maker. And they will be mailed directly to you, okay? So stay till the very end tonight, okay, to receive instructions on how to win these cool prizes. So today, let's introduce our panelists, okay? For today, we have Felix Mago from Dash Next. Now, Felix is the co-founder of one of the largest, okay, crypto communities in Thailand. He's the leading cryptocurrency advocate, okay, for real-life payments in the cryptocurrency of Dash. He is focused on business development and partnerships. With Dash Thailand, he has established the first crypto payment ecosystem in Asia. Felix published the Bitcoin Handbook, is the co-founder of Futuro and the Block Tech Institute. Felix is a fan of DeFi, okay, and he is constantly aggressively, okay, promoting the mass adoption of cryptocurrencies and decentralized businesses. In fact, okay, earlier this year, just when before people were, promoting about DAOs was a sexy thing, okay, he was promoting about helping people understand about DAOs as well. The next, okay, on our panelist is Luke, okay. Luke is our friend, okay, from Australia. He does two things. He runs a company, Fortifex, which is a portfolio management, okay, tool for crypto assets, okay, different kind of crypto assets. And he also runs a YouTube channel, okay, to educate people about all things crypto, all things blockchain, and all things DeFi. Okay, do check it out, Blocksiders. We were supposed to have Amadeo. He is with us, okay, today. However, he's currently stuck on a plane. Okay, there was some, these things happen. So he's still in the air right now. He says that he's still with us spiritually, all right? And last but not least, okay, we have Felix, okay, from Thailand. We have Luke, okay, from Australia. Dare I say it, we have someone, okay, from the Bankless nation, okay? His name is David Hoffman. He is one of the co-hosts of a podcast called Bankless. He is the Chief of Operations at Realty, and he is also a co-host for POV Crypto. He is a huge advocate for open finance and helping all of us, okay, to become more bankless. So thank you very much, okay, Felix, Luke, and David for being with us today.
Thank you, Jason.
Thanks for having us.
Yeah, thanks, Jason.
So the first question I'd like to ask, okay, all of you, okay, when it comes to DeFi is, for me, quite frankly, and it took me quite a while to actually, for it to click. Okay, it was actually, quite honestly, only quite recently, around 16th of June, when Compound issued its governance token, and I saw, that's when I started to see how lending protocols work, and then it clicked for me, okay, that this is a very interesting thing, okay, DeFi. Can you share with us, okay, starting with Luke, okay, and then, we go on round, okay, Felix, and then we end with David. When did DeFi catch your attention?
Probably go to someone else first. I've just got to go and rescue a cat. Give me, if you can hear that, give me 1 second. Just go to someone else. I'll be right back.
All right, sure. David, why don't you go first? When did DeFi caught your attention? When did it turn your head?
Yeah, so we started calling it DeFi, I think not too far into 2018 is when I think the coin got termed as a decentralized finance. We also thought about calling it like open finance, but the decentralized finance meme just kind of stuck. But I don't necessarily think that decentralized finance was invented or brought about when we figured out a name for it. I think that it actually came about as early as Bitcoin. Bitcoin is like the very first instantiation of what it means to be DeFi. I really consider like DeFi as like a superset of Ethereum. Like Ethereum is largely where DeFi is happening, but there's plenty of other instances of DeFi, again, starting with Bitcoin and now with applications on Ethereum. They're all composable and a lot more activity can happen. But I think to answer your question, I think when I got into cryptocurrency, that was when I got into DeFi.
Okay. How about you, Felix?
Great answer, David. Yeah, it's absolutely true. And this, I also see it a bit that way because, I mean, we're from Dash, right? We have a DAO running since 2014. So I would argue, we are like one of the first really like Bitcoin guy, so DeFi guys, pushing really hard for people to have their own finance, to control their own finance, to be their own bank, all of that. Nonetheless, I mean, when 2020 started, I saw a lot of changes, especially like with a lot of DAOs coming up. So I think there is a lot happening. And if you take it from a product consumer perspective, I mean, I always try to compare it with my first trading account back in like 1998 in the internet bubble, it was like a crazy, like a normal bank account, but you had like all these options trading possibilities. You could go short, you have so many things that really took a while for any blockchain kind of product to be a normal. And I think this is what makes DeFi, so crazy interesting. And I have to agree with you as well, Jason. It took me a while to click what is happening now, because I think 2020 really made a jump in terms of products and stuff people can use. And I mean, if you look at the old banking world, there's a lot of products that have been invented and that, it just took some time to bring them into blockchain. But, like all this yield farming, I kind of see it a bit like it's in the financial crisis, we call it cocoa bonds, right? Where you take like that and then you rebundle it and you rebundle it and the banks sell it to each other. And now we can do that stuff with, from me to you and earn a buck. So it's like super interesting. And I have to say also, it's like the first time since probably 2017 that I have this, this super excited feeling of this little boy in a candy shop, because there's so many things to learn, like really in order to get to that level of where DeFi is now, you have to sit down, you have to know about financial markets, and you should not just start it without reading a lot first.
All right. Okay. I'd like to. What's that? I think that's an excellent point. Okay. For those who are listening in right now, okay. I know that we have delivered 7 days of DeFi content. However, like what David mentioned, like what Felix mentioned, it's a buzzword. Actually, if you think about it, Bitcoin, Dash, all the early cryptocurrencies, it's the first primitive, for decentralized finance. So decentralized finance has technically, existed quite a long time, but it's just that we have recently seen a lot of traction. So for those who are listening in, you're beginners to DeFi. Some of you are texting me right now as we speak. Please teach me about DeFi. What you have learned over the last 7 days, which we highly encourage you to watch back the videos, is kind of like level 2, right? Is level 2. The the first thing that you need to do, like your basics, learning what cryptocurrencies are, how do you manage your assets, not your keys, not your coins. Those are the most important thing first. Would anybody like to add to that?
Well, I'm back from my cat drama. It's just so you know, it's 6 p.m. here, which is feeding time, and I haven't done that yet, so that's why I'm getting hassled. The joys. I guess just on your point, Jason, in people wanting to get started in the DeFi space. Now, I'd probably say that I've been involved pretty much from the start, because I never got out of crypto. Throughout 2016, 17, 18, 19, and 20, I never sort of left the space. So I've probably been in DeFi since. I mean, DeFi technically started to be thought about as a legitimate thing in about 2018. And that's where we're seeing companies like, see what I mean? Companies like, Chainlink, Aave, a lot of these businesses. I mean, even Compound's white paper was written late 2018. Ampleforth, that I just did a video about. Their white paper was late 2019, so early 2019. So this is a space that's been bubbling under the surface for the past, 2 years, for the past couple of years, and then we've only really seen it surface recently. Now, there's been a number of reasons why there's been this explosion, is because people actually are now being able to find an additional use for their cryptocurrency. So if you own Ethereum, or if you own Ethereum, or you own something, you can now earn an interest rate by doing something with it. Like if you stick it on Compound or you stick it on Aave, you can earn more tokens by lending it out. The other thing as well is the way in which ICOs, IEOs, this whole fundraising process has previously worked, has now been incredibly streamlined with the introduction of widespread DEXs. So, Uniswap is both a blessing and a curse. It's a blessing for projects who want to get started. It's a curse for people who are very new and don't know how to use it. Because, I would say if you are new to crypto, as in, you haven't been in for the past past couple of years, I would probably say don't use Uniswap, because your chances of getting in some way ripped off is ridiculously high. From phishing to not understanding which contract you're trading on because the token names are the same. DEXs are really the unregulated wild, wild west, in that, the four of us today could put a token together, call it Southeast Asia DeFi Week token, and then have something off the back of it straight away. But then someone could immediately at the same time put anti-Southeast Asia DeFi token up and then start shilling that to people. So,
it's both
so there's a few. There's good and bad things with that. And then I think one of the things that people might have noticed and has been in the media, in the crypto media anyway, recently, is the stuff with Yams. So obviously Yams was touted as being ample, but without the pre-mine and the VCs, which, I've got my own thoughts on ample, but
right. We're going to talk about Yam in a bit. We're going to talk about Yam in a bit.
Okay,
right?
sorry.
We're going to talk about Yam in a bit. But I would like to get David's and Felix's thought on this. Okay, we're all educators. In this space. Okay, but one of the things that a lot of people they tend to do is that they try to brand us as gurus. Okay, how do you go about that? In doing the work that you do, David, would you share your thoughts on this first? I'd like to hear your thoughts.
Yeah, so the work that I do is just a lot of content production, right? And so a lot of stitching words together. I try and evangelize and promote the benefits and the vision really for what this space could become when it's maximally successful. And what you just described and what Luke was just talking about is basically the speed bumps and the hiccups that we're going to go through before we get there, right? When I see the future of crypto in 10, 15, 20 years, I see sci-fi Ready Player One type adventures, right? But meanwhile, we have illiquid scam tokens on Uniswap, and it's not really exactly what I envision when I see that future. But I do see the building blocks of what is required in order to get there, right? And Uniswap and the automated market maker model and these contracts that just offer you financial services, quote unquote, in the cloud, really seem like the necessary tools in order to create this global, unified, coherent society, which is fantastic. But again, the nuances and details and difficulties of building this thing is it's not ever going to be how we expect it from like the Web2 world. And the greatest thing about DeFi is that it is a financial sandbox for experimentation, right? And we've never, because of our legacy financial system, we don't have that. We don't have ways to get developers to tinker with money, right? And like we said, money Legos and have this experimentation. Now that we have that, we're going to break a lot of things. And like we've known this is what crypto is all about. Like Bitcoin has broken a number of times in its early genesis, and every single crypto project ever since then has always also followed that pattern. Like things tend to break and then they tend to work. But as this space grows and as it grows so quickly, you can expect things to break along the way.
Okay. Felix, okay, can you share with us a little bit, okay, about what your environment is like, okay, in Thailand? When you start talking about DeFi, okay, how is the awareness, okay, of DeFi in Thailand right now, okay, over there?
Yeah, I mean, just to be clear, our focus really is all Asia and even all global, especially for building partnerships and doing marketing for Dash. But what I can say and what I've read a couple of times in the last week, and I think this is very, very true. DeFi right now is a space for a very, very limited number of usually white. Maybe we're here in Southeast Asia Blockchain Week, so at also Asian, so white, Asian, male. Kind of like a tech elite who is really like talking to themselves and largely, I would argue, so it's like it didn't find much echoing outside of DeFi. I mean, now as prices going up, suddenly more people are coming to look what it is and getting curious and kind of want to get in. I think that's but I've seen that a couple of times before in blockchain, and I don't wonder about that. But there's a huge gap from this. We are super early adopters and look into it, and we're like investing in these coins, and and the main reason why I'm personally doing this is because I just can't get enough of it. I wake up, I even dream of that stuff right now because I'm just I'm too deep in this candy shop, and there's too much candy for me to try. So I can't stop it. But on the other side, there is still, I mean, look at the usability of everything DeFi. If I take an average user, it's already super hard. If I take somebody like, I don't know, my mom who just learned to use online banking, it's so next level that I can't even explain to her anymore what I'm doing, all day long. So there's a huge gap, and I think, I have even no idea how long we need to bridge that gap. I feel, now we're in DeFi, and for me, blockchain and all that stuff we talked about in 2017 is kind of so far away already. I feel we will create the same situation with DeFi, but an order of magnitude higher.
Okay, so it's very, very clear. It's very, very clear that we still have a long way to go. Yes, I've been receiving a lot of feedback, okay, throughout the week that even though we have covered a lot in DeFi, people still find a steep learning curve, okay, like how do you get your MetaMask wallet, how do you get your first Ether, and etc. That goes without saying. However, one of the other concerns, okay, that people, I think that is so important, I love, okay, to hear your thoughts about it, is that are we seeing a repeat of 2017? Are we seeing, okay, a craze? Are we seeing a bubble forming right now? Or has it happened? Are we in it right now, or is it going to happen? Okay, David, what are your thoughts?
Yeah, I think it's absolutely fair to draw some parallels between 2017 and where we are now. One of those parallels would be there seems to be a very strong emergence of tokens. Like DeFi tokens are now a thing. Like Compound, and what Compound launched with its comp token and with yield farming created this new asset, and mainly created this way to achieve yield in DeFi, right? And so the comp token was valuable, so it incentivized you to use compound so you could get the comp token. And then we put that into Balancer, we put that into Ampleforth with its geyser mechanism that ended up creating Yiffy and the Urine protocol, and then ended up being the building blocks for the YAM platform. So we have all these tokens now. And then meanwhile, there's a lot of the sleeping giants from 2017 that did an ICO, and then that community made it through the bear market. And now that product has been built and that community has grown together into this 2-3 year long community that all suffered through the bear market together. And these is tokens like Synthetics, Aave, Chainlink. These are all old tokens from 2017 that made it through, right? And so we have this new class, the old class of tokens that is now resurging into the limelight. We have this new types of tokens that is bringing returns and yield into DeFi. And I think and then especially with YAM, this new recent token, it was just constructed very quickly from these stitching together of a bunch of different mechanisms into what is YAM. And so creativity and experimentation is back. And so also are the returns for investing in DeFi tokens. And so to that degree, I would say, yeah, 2017 is back. But it's also not back in its some of the best ways, right? Where, about 2017 was some team spinning up a website, submitting an Ethereum address and say, hey, send us money and we'll send you tokens, and then we'll maybe build this product, right? Now, a lot of stuff has been reversed, where people have built a product that has actual cash flows, that has actual fees, and then they make a token that governs over those cash flows, and then they spawn it out into the DeFi world and say, all right, now go get the token. It's like a scavenger hunt. You have to go do these things to go get the token. And so there's actually real products here, and now there's different ways to work for the tokens rather than just sending $1,000 into this Ethereum address and then getting tokens back. So yes, very similar. Also very important differentiators.
Very interesting, but at the same time very scary. Okay, because one of my biggest worries is that with for example, you mentioned YAM, and I'd like to get your thoughts, okay, of YAM, okay, all of you. To me, how many of you actually had a skin in the game with YAM? Luke, Felix,
No,
David, did you save YAM?
I did, yeah.
Yeah.
But
So here's the thing, okay. When it comes to things like YAM, all right. So for those, okay, to build some context, okay. Last week, a project, okay, was introduced. It was called YAM, okay, and what they did, okay, was within 48 hours, okay, the project failed because there was a bug, okay, in the smart contract which rendered the function, its intended function, to be useless, right? Okay, there was $400 million went into this protocol, and it was a massive failure. But however, they were upfront, okay, that this is extremely high risk, extremely high. It's based on unaudited code. I was kind of I'm going to get a lot of flack on this, but I was kind of a bit glad that it did not succeed, okay, because had it become a phenomenal success, then it would kind of common knowledge game theory would suggest that a lot of people would say that if YAM can do it, let's create more tokens, okay, without needing, okay, any audited contracts.
I'm quite sure this will happen anyway.
Which will happen anyway. What's that? So what should people take away? Okay, what are the learnings, okay, that we can learn, okay, from something like YAM last week?
I think probably the main thing is that we're still in an experimental industry, and there's benefits to be made. There's benefits to be had by investing in experiments, but sometimes they blow up in your face. The other thing as well is that not all ideas are good ideas. Like there's probably people here that love Ampleforth. After spending a significant amount of time researching it, I think it's one of the dumbest projects that exists. The idea of rebasing on price ups and then rebasing on price downs, essentially it creates a situation where there's no incentive to hold a token like that sub $1, and there's an additional incentive. There's an additional incentive to hold it when it's above its price target, which essentially is the opposite of what you want to happen, essentially. And we saw that with YAM to an extreme degree, where people who had already experienced positive rebasing with Ampleforth would have looked at YAM and said, well, if we push this thing to $150, what's the rebase going to be? And then you saw the result. You had a token that was technically worth more than the entire circulating supply of money in the world. I think it got to like $60 trillion is what the overall supply of YAM was worth. And there's a reason. It's because if you gamify something to that degree, then the benefit of ownership away from the price target is exponentially higher. So it means the further it gets above $1, the more that your incentive to own it gets exponentially higher, because you're going to be getting these positive rebases. And the further it goes below $1, it means that there is an even more significant disincentive to buy it. I mean, even if you're buying Ampleforth now at 60 cents or whatever it's worth now, the benefit of potentially earning 40% as it goes from 60 cents back to $1, which is what it's designed to do, is more than offset by the risk of getting a week of negative rebases and you're dropping 40% of your position while it's just sitting there rebasing over 10 days.
Right.
So
okay.
I'm suggesting that, I mean, the one thing I would say is that as you're playing around in this space, you're going to see experiments that work out well, and some experiments are going to seem like dumb ideas, and then once you've done the experiment, it ends up being a good idea. And then sometimes you do experiments where the idea was, seemed like, oh yeah, that's interesting. And when I first read about Ampleforth, I was like, oh, that's interesting. But then once we've gone through the experiment, we then realize it's completely retarded, and it doesn't necessarily mean that it's good. And I would challenge anybody who actually thinks that Ampleforth is a good investment. I'd go one-on-one, and I'm not have absolute confidence that I'd win. But it's I just don't see. I mean, but no, don't get me wrong. I mean, it was a good experiment, but not every experiment is going to be good, and not every experiment should be pursued after it's been tried. That's the one thing I'd say, because we've seen it with DeFi platforms like loans. Of course, that experiment worked out well. I mean, we're looking at how insurance works, like with NXM, Nexus Mutual. No claims have been made against NXM yet, so we don't know what the reaction is going to be when there's a claim against people who are staking, against the insurance contract, and see how people react, and see if people still want to stake after they drop all their funds and all this kind of stuff. So these experiments still have not yet been fully tested. And the ones that have, I mean, sometimes there's no point iterating because the idea was stupid in the first place.
Was the YAM experiment an interesting one to you, David?
Yeah, I like YAMs, and I'll actually push back on Luke here. I'm not going to claim that Ampleforth is a good investment, but I think rebasing is actually much more interesting than I would agree with Luke with. And I'm not sure I agree with Luke's framing of what rebasing is. Rebasing is just an adjustment of the unit for a particular token. And so like something can rebase up and down, and the supply can change up and down pro rata an equal share. And so but taking the rebasing out of it, like you have something that's very similar to Bitcoin, because Ampleforth and so far the two tokens that I know that leverage a rebasing mechanism, which is Ampleforth and YAMs, when you buy like 1% of Ampleforth tokens or 1% of YAM tokens, you receive the same share, the same percentage of all outstanding tokens, very much just like Bitcoin. And it's just the rebasing mechanism that is like this accounting trick, right? And what we saw with Ampleforth is that this rebasing mechanism generated a lot of energy, like for some reason. Maybe it was just a bunch of people falling for this. Sorry?
So did Forsage. It doesn't mean it's a good thing.
I'm not familiar with Forsage.
Okay.
And so like regardless, it produced a ton of energy into the system, right? And I won't really fight too back and say like Ampleforth is just like kind of rebasing for rebasing's sake, and that might not be interesting. But Yams took rebasing and took that energy of people playing with that rebase, buying and selling around the rebase, even though it might kind of be a gimmick, and it turned it into being like this meme, and it created a treasury out of it, right? So the Yam token was supposed to generate this treasury from this rebasing mechanism. And so if the rebase ever was positive, the Yam would actually mint Y curve tokens, which is a very high yield interest stable coin, and deposit it to a treasury that was governed by the Yam token. And Jason, you called the Yam experiment like a total failure. And yes, there was this bug in between the connection of the Yam governance and the Yam rebasing mechanism that broke the link to the treasury. But I do want to differentiate that yield farming Yams didn't break. Like that went as intended, right? And the people that deposited like $600 million into the Yam contracts, that money was fine. It was the value of the Yams that fell because people realized that the Yams couldn't access the funds from the governance system. And so I would actually, and I actually still like Yams. People think that Yams are a dead project, but I think it's actually still alive. And so there's easily this path forward because over $100,000 in 70 minutes was deposited into the Yam Gitcoin grant to help fund an audit to do this thing the right way. And so maybe it was a really kind of reckless of the team to do this so fast. Like it turns out that wasn't the right move, but the Yam energy is still alive. And so it's on a temporary pause while this game, it's kind of like a game, while this game is now off chain, while we figure out how to coordinate like an audit and generate protected and safe code so that the game can return on chain. And then I think, I don't know the team, but I would imagine that there is a mechanism for getting the Yam version 1 tokens ported over to the new Yam system so that this whole thing can start again. I think it's just going to start right back over.
Cool. Now, I just want to like point out, okay, to the community that there's a huge divide, okay, between whether Yam, okay, is useful or not. It's really, really new. I've written a post, okay, about. So I got to learn about Yam, okay, also because thanks to Luke, your YouTube, okay, video about what is Ampleforth, okay. Do check out, okay, Blocksiders, okay, video on what is Ampleforth. That will give you some clarity of how Yam would work by understanding Ampleforth first.
My video is a lot more neutral than my opinion. I try to keep my stuff as neutral as I can. So it's not just me shitting on Ampleforth for 15 minutes.
Right. So what's that? So it's just something that we've never seen before. And unfortunately, yes, okay, it was really, really rushed, okay, and it did not turn out, okay, the way that it did. However, I think that it is unhealthy, okay, that people just immediately scream scam when they don't understand what it actually is, okay? And there's a very funny thing, okay, about this space, and I would like to hear, okay, from Felix, okay, if that's the case as well where you are, because when something is like green candle, really, really long green candle, is the best project in the world. Like what happened today, the Wi-Fi token, okay, like jumped from 6,000 to 9,000 US dollars per token, and then suddenly, it's like, we told you so. So many tweets on crypto Twitter. We told you so. We told you so. But it's and who knows? Okay, Yam might actually turn out to be something. Okay, that it's just that we did not understand before. But how do you as educators in the space, how do you help people to differentiate between what is a legit experiment and what is actually a money grab? Maybe let's hear from Felix first. How do you help people to, in the DeFi space, to differentiate between what is a legit experiment and what is a money grab?
6 months ago, I was advising a project that tried to go live, and we were figuring out a token price, right? And they were obviously they wanted to get money from investors. I was strongly advising them against going any ridiculous evaluation beyond like something between $3 to $5 million for a project that does not really have a product, does not have users or anything. I found it actually already too high. And I think for the last 2 years, most projects failed who were too greedy, right? Last week, I was looking for any project with a market cap below $12 million and try to find that in DeFi right now. And, you need around 1.5 to 3 minutes to reach your 12 million evaluation at these times, right? So let's be very clear, everybody who's investing in that space, it's a very hype space. It's not really about having sustainable companies at this point, as I see it. It's like none of these evaluations are justifying the returns for, like, in terms of business plan or business case any of these projects have at this moment. It's yet they have high potential. We are all dreaming about what this stuff can do, and at the same time, it's crazy revolutionary. What other kind of industries we could potentially make obsolete with all these products. So there's a bit of a gap, right? And I mean, I think if you look in history with any hype cycles, there is only so much time a hype cycle can go on, and then stuff will go back to reality, right? So if you are willing to throw your money in that, be sure you can use it. And as always in life, if you have the potential to get really high returns, the risk is extremely high, and this is why, I mean, it's kind of ridiculous to cry about that somebody lost money in YAM, right? Because you know it, and you shouldn't have played with money you couldn't lose in the first place. So I think this counts for all of the projects, and I'm hyped, and I try to look at the teams, look at the project, look at the business case, look at what from what old industry does it take something away, and there you can see some potential in these projects, right? But then again, we are in a hype cycle, and be sure that most of the stuff is very, or might be very expensive right now, and might have a big chance to go down a lot.
So you touched on something there, okay, which I think is a great thing to segue to, okay? So we are seeing the emergence, okay, of these DeFi tokens, all right? I think that somebody asked the question, what is yield farming, and can we explain yield farming very simply, okay, to people? I have a definition, and I'd like to hear your thoughts on this. My definition, okay, of yield farming is that right now, these protocols exist, okay? These new money Legos exist, okay? Different projects, Compound, Aave, Synthetics, Curve, and etc. And as a way to give community ownership, okay, to decentralize what they have built, they are issuing these tokens, okay, as a form of reward, okay, for using their protocol. So it's kind of like we are going through an incentivized testing phase in DeFi right now, which would not last forever. Okay, that is how I that's how I define yield farming. Is an incentivized phase that DeFi is going through right now that would not last forever. What are your thoughts, okay, about yield farming? Okay, how would you describe yield farming, David?
Yeah, I think always going back to Compound, because Compound really changed the game with their token issuance. Yield farming is the act of supplying and borrowing liquidity in order to supply and borrow liquidity, right? So it has a recursion to it. So the act of, like, you can go in and you can use Compound, but you can deposit your Ether, and then you can pull out like USDC, and then you can use that USDC for something, right? Send it to your bank account, like pay for a credit card, whatever. But if you, instead of doing that, you resupply that USDC back into Compound, that would get you more rewards in the comp token, because the comp token is sent out to people who do both borrowing and lending. And so you can submit assets into Compound, generate a loan, pull out that loan, then turn that loan back into deposits inside of Compound, and do this on a cycle so you can maximize the comp token that you are receiving, right? And so it's just kind of using the protocol for the sake of using the protocol, right? And like the metaphor I like to use is that when you take a ride on Uber, that Uber gives you like an Uber share as like a thank you for doing that. And yield farming, like, and that's nice for users, like, yeah, users, that's a little perk for users, right? But yield farmers are people that are therefore going and taking Uber rides on purpose just to collect more Uber shares, right? That's where yield farming comes in, and that's the important differentiator there.
That's a good comparison. Luke, do you have any thoughts, about yield farming? Have you yield farmed yourself?
Yeah, I've been through the mix, but I mean, the only thing, and I always I guess I'm one of the more cynical people in crypto, but it's the one thing I still think is experimental that people obviously should also be aware of is that we still don't know how this experiment in governance tokens is really going to work out. Even Compound, which has been probably the most publicized governance token. I mean, then, other companies like Aave then changed what the FLAN token was meant to be to turn it into a governance token and blah, blah, blah. But we still don't know what it's going to be like when it's actually going to be completely democratic. We don't know what's going to happen when the VCs end up liquidating and the founders no longer involved, and there's not a couple of major players making the majority of the voting decisions. The biggest concern is that once we end up moving to these really completely decentralized DAOs without a driving force, then any business that is like that is going to experience stagnation. Sort of in the same way that if you end up with a country where both parties are just constantly locked at each other and you end up with no real leadership, nothing ever gets done. And that's the big issue and the big risk with these governance tokens. And the thing is that is maybe the negative side that I'm talking about. But the thing is, we don't know which way it's going to go. It's still an experiment. So, yield farming is an interesting concept, but yet again, what are you really farming? There's no way of really having any real understanding of what the underlying value of what you're farming is. Because essentially now it's all just hyped up governance stuff. And don't get me wrong, I like Compound. I own a lot of Aave, and I think that, so there's obviously value in it, but I still think that we don't know where this is going to end up. And right, this is where we could get into a situation where we're back in 2017.
So this is very interesting, right? Okay, which comes back to, throughout the 7 days, as we invited everyone, to talk about, their what they are building, we did not talk about price. The token price. However, right now we are about to segue into the question, are these DeFi tokens overvalued right now? You get what I mean, right? Are they, and right now, to me, the logical thing is these, the value of the tokens right now is dependent on how many people actually care about the governance of this protocol, right, David?
Yeah, it's a legitimate concern and a criticism to bring up. And I would also actually bring up that same pattern of a lot of equities companies on public stock markets, right? So a lot of tech companies don't pay out dividends, right? It's a governance over a company that, like, people don't really ever exercise that vote when they own shares. When they own shares in Robinhood, and they also don't really pay a dividend, like Netflix, Amazon, Apple, like all these big companies don't pay anything out. And so at the same time, it's like, I would be sad if the DeFi tokens ended up following that same route, where people just are trading them based on their perceived evaluation rather than the actual cash flows of the system. Because being able to capture cash flows is the reason why people are excited about these things. And so they actually need to capture cash flows. And I also totally agree with Luke, is that, like, I think a lot of these VC DeFi tokens, Comp being one of them, Balancer being one of them, Metastable being one of them, are really going to have a hard time generating that community that is really required to govern over this protocol, because of the existence of these VCs that have a very large supply of the tokens. And what do VCs have to do at the end of the day? They have to sell. And so like there's going to be sustained like sell pressure for a lot of these VC tokens. And that's why tokens like YFI, YIFI, and the Urine protocol, and also why tokens like YAMS, which are like no founders, no VC rewards, like no founder rewards, are really elegant to people, because that means that there is no like big dumping pressure on these tokens in the DeFi world. As to fairly evaluating these things, it really depends on what your time horizon is, right? Like in the crypto world, and especially now, it's getting shorter and shorter. We don't have the capacity to see too far into the future. Like if you had asked me 2 or 3 months ago, like what the Ether price was going to be at this point in time, or like if DeFi was going to explode or not, I would have been like, I don't think it's going to change, because over the last 2 years, Ether price has been suppressed and DeFi has been like, while growing, it has been like not generating that excitement. Like this excitement came out of nowhere, but it's been boiling underneath, and it finally like blew up like a geyser. Like it finally got the recognition it deserved. But this valuation that we have of like, how do we evaluate this DeFi protocols? We can only compare them to each other, because it's really people's time horizon as to like, okay, are you evaluating this thing on a 2-year basis, a 5-year basis, on a 10-year basis? No one really knows how far out we should expect to evaluate the growth and adoption of these things. But at the same time, just like in the ICO mania, there could very well be a sell side liquidity crisis, where like all of a sudden people that were evaluating like the SNX token like on a 1 to 2 year time horizon get bought out by people that come in and evaluate it on a 10-year time horizon. And that 10-year time horizon is ridiculous. It's trillions of dollars. And maybe that's just the mania that ensues. But it really depends on how far out you assume you want to take that gamble and that risk for the adoption of these protocols.
So, Felix, any thoughts, on how, the value of these tokens, of these DeFi tokens?
Yeah, I agree largely with David, and maybe one thing to make stronger here, like even in the classic, I think, it started kind of like in the 70s, 80s, that suddenly Silicon Valley invented these VC-driven models of building companies up that not necessarily have to make money. They were made for a future dream than for an immediate cash flow, right? And I think we have seen that a lot with companies like WeWork or whatever. There's so many companies that not pay dividends, that in fact don't earn money. They are built on a big dream to become so big that they erase all the competition and all that, right? So I think this is also largely repeating now in DeFi, which kind of gets it back to reality in a sense. It's not something special. It's kind of the same that happens already with any tech company in the Silicon Valley. So this is one thing. The other thing is, yes, it always has been a problem of big whales in the industry. And honestly, from all what I read and all the analytics I see, history is repeating again itself. Also here, most of these big projects are held by less than 50 people, probably less than 10 people hold 80% of all tokens. So it's exactly what David says. These people are not in it for the big dream or something. They're in it to get money, to make money. Fair enough, fair game. But investors have to be aware of that. And obviously, you will not be the first to you will most likely not be the smartest money. There will be other people with larger stakes, better information, and but it means you should be clever. You should listen to the stats. You should look at analytics. You should look at regular news infos, and you should have a strategy on what you want to do. Recently I've as kind of a sport to improve a bit my trading skills, asked people like, what is your skill? What is your strategy to exit a token? Do you have a stop loss? Obviously, stop loss don't make really sense because the token is fluctuating too much, right? Even if I have like 30% stop loss, it's, it can happen, and tomorrow I would double my money anyway. So it's kind of, is it the right strategy to have a stop loss immediately? But most probably it will be the right strategy to have an exit plan, right? And I see too many people just hodling, and have a very good feeling if the book value is amazing, and You go out, you have a party, yet you don't have any dollar extra in your pocket, right? So have a strategy to go out as well, and and take out your money, save your money, and do something maybe nice with it.
Okay, there's a lot of layers, okay, and a lot of golden nuggets that you guys share. From you, Felix, okay, I got that. Number one, paper profit is still paper profit, okay. If you're coming in, if you're wearing an investor's hat, okay, you need to have an exit strategy. Otherwise, okay, it's basically no, it doesn't work like that. We have like just about like 2 minutes, okay, left, okay, before we end the session. I'd like to like spend this last 2 minutes, okay, to give a shout out to each and every one of you, okay, opportunity to basically let the community know a little bit more about what you do and how they can be more active, okay, what you do. Felix, okay, you run a Dash community, okay, in Thailand, okay, is one of the largest, most active, most loud, most vibrant, okay, communities out there, okay. What are you working on, and how can the community, okay, listening in right now from Philippines, Indonesia, Singapore, Malaysia help you?
Thanks for giving that opportunity. In fact, we just launched in the Philippines. We have launched Dash Philippines, so with the remittances use case and educational use cases, also bringing people for the upcoming Dash Evolution release. So we're working on many angles. Number one is the new release, Dash Evolution. Number two is merchant adoption and payment adoption for everything crypto payment. And the third one is because DeFi is getting where it is, and there's many great companies to partner up with. For me, I really want to get more in this space, so I'm really looking into is it possible to bring Dash into DeFi by building bridges. We have in the last year made a great actually exchange and trading strategy where we went around and built partnerships with most of the big centralized exchanges to have our feature called Instant Send integrated. So now what you can do is send Dash not only from wallet to wallet, but also from exchange wallet to exchange wallet within seconds. So you can send Dash without waiting for any block confirmations. That means for trading, sending money back and forth for different trading pairs or whatever, it's really a cool option, and I would like to transfer that value also into DeFi. You can send Dash, you will spend less than a cent for a transaction, and it will arrive in around 1 second. So I think that's a very nice value proposition. On the protocol level, we have done a lot in terms of security. So I'm happy if anyone reaches out to me to build partnerships. You can reach me on Twitter, Felix Mago, MAGO_Dash, or on LinkedIn, Felix Mago.
All right. Now for Luke, okay, you run a YouTube channel called Blocksiders, okay. What do viewers, okay, from Southeast Asia get to look forward from you next?
I'm putting out a video on. Hold on 1 second. I was just getting a call in at the same time. So I run that channel. Basically, I do is impartial. I mean, in person, I'm a bit different, but I try to put out impartial stuff on what's going on in crypto. Basically, I just do it because I enjoy doing it. Mostly the research side. So I've just done a video on Ampleforth, which talks about basically how the protocol works. I think it's one of my bigger videos. Then I've done Aleph, which is actually a really, really interesting project, Compound. So a few things that we've talked about today. I'm about to put one out on DIA today. I'm going to record that tonight and push that up tonight. So DIA is the Decentralized Information Protocol. So asset. It's an Oracle project, so competitor with something like Chainlink, but it's designed to give independent, accessible, and reliable data streams to DeFi projects and other crypto projects or anything on blockchain as an Oracle. So think of it like something like CoinMarketCap, CoinGecko, CoinPaprika, combined with Bloomberg and Thomson Reuters, except the data is controlled in a decentralized manner as opposed to by one party. So the example being in that, Binance now own CMC, and that's CoinMarketCap. And we all know that basically the ability for a coin to get recognition is somewhat dependent on its ability to get on CMC. So basically DIA is designed to be a part of, it's meant to be an independent, decentralized, not-for-profit Oracle to give information to the same reliable, transparent information to everybody at the same time, so that individuals that own these data houses don't have an advantage over the rest of the market. So, and then, if you provide data or you provide data analytics to the platform, you get paid in tokens. And then if you want to then eat that data, so if you're a DApp developer or something and you want to eat those tokens, so you want to eat that data, then you pay tokens. And then, of course, like everything else, they also do governance as well. But yeah, that's what I do. Sorry, I do stuff like that. Like what I just did for 2 minutes, it was probably unnecessary.
Right. So what's that? Actually, I was looking forward to Dia data. Okay, the previous hour. Unfortunately, they had a last minute thing. Okay, that they couldn't show up.
Well, they finished their private sale on a bonding curve today,
Right.
and that's an interesting story in itself. But yeah,
Right. Okay.
I won't give it away.
Basically, Dia data is kind of like a Wikipedia for price for financial data. And I kind of was interested because what they're basically trying to solve is, can I trust this price that I see on the website? That's basically what Dia data is trying to solve. So last but not least, okay, we have David Hoffman. Okay, I know that. What time is it there in your time zone right now?
It's 2 a.m.
It's 2 a.m. So amazing. Okay, thank you so much for being part of Southeast Asia DeFi Week. All right, tell us a little bit more about what you're trying to do on the Bankless side.
Yeah, so Bankless, I don't really know what to call it, but it's like a media studio of sorts. It's a newsletter. We have a YouTube channel. We have a podcast, and then shortly we'll have a website as well. But we produce content in a bunch of different ways. And all of this content is around gathering and creating what we call the Bankless Nation. And the Bankless Nation are the people that have chosen to use these DeFi tools and these blockchains like Bitcoin and Ethereum to opt out of banks and use these internet native, digital native systems to manage and store your personal finances and wealth, right? And so we kind of allude to like going westward in the sense of, going into the frontier, going into the unknown, where there's risks and there's also rewards, right? So that's kind of how we frame it. And so like on that, we have weekly podcasts with like people that are building some of these Bankless tools. We recently interviewed Andre from the Urine Protocol, and then we're about to go into like our VC series. And then on our YouTube channel, we have like tutorials and what we call like State of the Nation, which is like our fireside chat with what's going on in the nation this week, right? And so we're really spinning that out, really doubling down and putting a lot of content out there. And so it's a ton of fun. It's been a ton of fun.
All right. So again, thank you so much, to our panels, for being part of Southeast Asia DeFi Week, the final day. That's it, for today. Be back, tonight, because we're going to cap off Southeast Asia DeFi Week with a sharing from Charles St. Louis from the Maker DAO. And he's going to be talking about decentralized governance. So I hope you join us then. Because give us your best questions. And the top 10 best questions will be winning. Maker swag case worth of $30 sent directly. To wherever you are in the world. So I'm looking forward to that. With that, thank you guys. Thank you Luke. Thank you Felix, and thank you David Hoffman for joining us. For today. Bye.
Cheers. Thank you.
Fantastic organization. Thank you very much.
See ya.
Allow me to show you something.